Good morning, Predicted Dates family. Hope everybody's doing well. Let's get started. We'll kick this off with a quick review. We had our rally up last Thursday and Friday, a little bit more on Monday, and then yesterday we had our pullback. We had some economic data come out that was not as favorable. Here we go. So, yesterday we had some wholesale inventories that came out. God, they haven't even updated this. There it is. Basically a hit forecast, and then we had Powell talking at the Senate yesterday. Really, nothing crazy was talked about, or he didn't really say anything at right at 10 a.m. that caused the sell-off. A lot of times I talk about they just use the economic data to make a move, and sometimes it doesn't even matter what the results are. But overall today, we do have unemployment at 8:15, so we'll probably see that live while we're going through prep. We've got some trade balance at 8:30. We have Powell speaking again at the House today. Some jobs data, and at 2 p.m. today, the Beige Book, which is, you should go look it up definitely, but it's kind of like the Fed budget. The Beige Book, when it drops, can cause some interesting reactions. I'm not going to say it's exactly like FOMC, but there's been times when we see some interesting reactions around 2 p.m. Going into the end of the week, we have jobless claims, one more Fed speaker, and then on Friday, some mainly just jobs data, right? Coming up next week, we've got the big ones: CPI, retail sales, PPI, and then I believe the following week will be an FOMC. So, we can see, the first 30 minutes, we didn't really do anything, and then right at 10 a.m. we just started dumping. And we very quickly fell right to 40.30 and gave it out. That was a big sign because I talked about the 2-hour squeeze bottom being there, and we fell through it so quickly and kept going that, at least to me, it looked like a kind of sell-off day. And you'll notice I've drawn a little zone of support, basically just going back to Friday's overnight price action. On Thursday we had that strong bounce up, and then Friday we had continuation. Yesterday, when we were selling off, I drew this little box, basically just around some overnight highs and lows, because we had a strong push, we held, we kept going. So this becomes support, and you can see we fell to it, we've held it, going into open today. Why am I pointing that out? Let's take a look at the daily, because I know I know a lot of folks saw the rally on Thursday and Friday and thought, this is crazy, there's no reason to be going up, blah, 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 blah. But really, it's all about the technical setup, right? We fell down near that 3,500 in October, had a nice rally up, came back down, setting higher lows, right? Here's a low, higher low, and a rally up into this year, and now we're pulling back to the daily 200. We've been below the daily 200 like all of last year, and we're finally above it, and the selling that we've dealt with in the last month just got us right back to the daily 200, where we held, right? The daily 200 is this yellow line. We got down, hit it, slipped it for a second, and then took off from it. This is a very natural. We've been underneath our moving averages in a bearish setup all of last year, and now we are finally breaking back over them. flipping them into a bullish orientation. So we should always expect, after we start to flip them and everything's looking good, they're going to pull right back to them. Those daily moving averages are liquidity, or at least I like to refer them as liquidity. A lot of big money institutions or whatever are causing us to, get to those moving averages and reject, or pull back to them and hold. There's a lot of liquidity at those levels. So overall, this is still a bullish setup. I think, last year may have turned some people into perma bears, but I try to remain unbiased and follow the price action. I'm not a bear or a bull or anything. I'm just ready with a thesis in each direction. So, thesis for upside, we have been setting those higher lows, and we just got another one. Yes, we had some selling yesterday, but ultimately, we're not into bearish territory until we take out that low that we bounced at last week, that 39.25. We had Powell yesterday and today. I've seen crazier things in this market, and I wouldn't be shocked that we sold off right back to support. I wouldn't be surprised if we engulf back up today for no other reason than why not? Take some profit, bring it back, reload. Powell's going to speak again today. It's going to be volatile. They could just reverse it right back up, turning all of this selling into a bear trap before taking off higher. So overall, I'll stop talking about thesis. Actually, the other thesis, right? We lose this zone of support, start to engulf Thursday, and we're going to go test that low. Which could, lead to a little double bottom type thing, a W pattern, right? Pulled back, made a pop. We might pull back and retest that low before heading higher. Again, that's why I say we're not really bearish till we take out this low, because we're changing the overall trend. We have been setting higher lows. We held a higher low. If we start to take that out, then we'll fall back to the previous low down here near this 3,800, right? Or even the more closer one, the 3,900, where the bottom of our daily squeeze sits. So, for today, enough on thesis. For today, we need to hold this zone. It spans about 39.75 up to 39.83. Holding it pre-market. We have our 30-minute squeeze down there. So even if we dip down there this morning and test that 39.80, looking for us to try to hold this zone, 39.75, 39.80, bottom of this 30-minute squeeze, and try to push back up to these daily moving averages above. Right above the 30-minute squeeze top, we have the daily 8 at 4,009, the daily 50 at 4,011, daily 15, 40.22, daily 21, 40.29. So let's see if we can hold this zone at about 39.75, 39.80, and head on back up. If we can clear 40.20 and 40.30, where the daily 21 sits, we could easily engulf right back up to 40.56, what we sold off from yesterday. If we start to lose that 39.75, then we want to target down to that 39.53, 39.50, where the daily 200 sits, maybe even that 39.41 as the next key level. Anything past that, we're going to get down to that 39.25, 39.22, and this daily squeeze bottom around 3900. All right, let's move on. Before I move on from ES, we did fall on, this is my chart that has the 45 EMA from every time frame. We did fall below all of those, so they do sit above as resistance. And as you can see, we're starting to crack into them. The 15-minute and near the 30-minute this morning. Basically, the only reason I'm showing this is if we can get above 40.15, basically, and clear 40-20, we are back above those 45 EMAs. They will pull back up and turn bullish. So just know that we do have some resistance right around that 40-15, 40-12 to 40-15. All right, now we can move on in Q. So NQ was definitely strong in this rally up. And on Monday's prep, I drew this little zone. Yesterday morning, look, we gave it out, fell to moving averages, popped up and retest it. I mean, these are the signs for continuation. When I draw these things in prep, it's worth, also drawing them yourself, because it worked Monday to propel us higher. Yesterday, when we started to fall right through it, that's your sign to start shorting. And then on the bounce back, when we can't get through it, short some more. But ultimately, on NQ, we've made it down below the daily 21, daily 8, which sit above right around 12,200. We have a key level below at 12,100 at the bottom of the 30-minute and hourly squeeze. So as long as we can hold 12,100 today on any dips, looking for us to try to get back above 12,200, back to 12,250 at the top of the hourly squeeze. And then maybe right back up to the highs from yesterday or maybe even Monday. But if we start to give out that 12,100, we want to target down to 12,000. And the daily 200, which sits at 11,950. The daily 50 sits at 11,900. And the bottom of the daily squeeze is near the low from last Thursday, 11,800 to 11,850-ish. So those are the targets to the downside, targets to the upside on NQ. Moving on to Ready. So Ready got hit a little harder. If you look, Ready was weak on Monday, even when the market was rallying up for half the day. And then when the other indices turned around and started selling, Ready sold off further. I'm only pointing this out just because Russell can be kind of an early indication. They were rotating out of small caps before the market even dropped. Actually, while the market was rallying, they were rotating out of small caps. Then we reversed on Monday, and they just kept going. So, and the Russell has gotten down near last Thursday's lows, and from the week before that, those lows. So Russell's going to be a great gauge today. We want to see it stay above 1875, where the 1 hour squeeze bottom is. And that's that low from a couple of weeks ago. As long as we can hold there and start to push back up, if we see them rotating into small caps and we get quickly above 1890, where the 1 hour squeeze top sits, then it should, kind of give us a green light for the chance to engulf back up. If we can take out that 1890, we want to see us get up to 1900, where the daily 8 sits, and back through above 1900 to about 1910, where the daily 21, daily 15 sits. YM. It's all about this 32,800. Very big key level. And it's the bottom of the hourly squeeze. On any dips, as long as we can hold 32,800. Looking for us to push back up to 33,000, where the top of the 1 hour squeeze sits. And then if we can push past that, we've got the daily 8, 30,070. The daily 15, 33,200. The daily 21, 33,300. So plenty of targets to the upside. If we lose that 32,800, we want to target down to the bottom of this daily squeeze, 32,600. Last week's low, 32,530. Daily 200 sits at 32,430 in the bottom of the daily squeeze. Apple was a very strong leader to the upside. And, and yesterday's selling just a little pullback. Not too bad. Overall, it's all about holding 150 and 151. Made it down to 151 yesterday, holding it overnight. Bottom of the 30-minute squeeze is now at 151, so I'd love to see us hold there. Even if we slip to 150, that is still okay with me, as long as we bounce at 150 and get back above 151. We start to lose 150 where the daily 8 and 15, daily 15 sit. Then we're going to go down to 149 where the daily 21 sits, and maybe even back down to 147.5 where the daily 200 sits. But if Apple can remain strong above 150, 151, we want to target right back up to the zone that we sold off from yesterday at 153.8, 154.7, and that 155. Amazon. Amazon, also, if you look, not so bad yesterday. It slipped down with the market selling off, but it held its squeeze bottoms and then rallied up to the top. So overall, looking for Amazon to hold 93, 92.5, where the squeezes are stacked up, the bottom of those squeezes, sorry. As long as we can hold 92.5, 93, looking for Amazon to get back above 94 where the daily 8 sits, try to fight up to 94.75 where the daily 50 sits, and if we can push through 95, we'll be firing these squeezes to the upside to try to get back to 95.5 where the daily 21 and daily 15 sit at the top of a 2-hour squeeze. Google. Again, selling yesterday wasn't quite so bad. We just made it back to the daily 21 and the daily 50, which are stacked at about 93.75. I have a key level at 93.5. So we've got a zone of support there at the bottom of this 30-minute squeeze. Looking for Google to hold that 93.5, 93.75, and start to push back above 94.25 at the top of this 30-minute squeeze. And if we can keep pushing up to 95, 96. But if we start to lose that 93.5 at the bottom of our squeeze, then we'll likely fire down to the daily 8, daily 15, which sit at about 92.5 to 93. And should those give out, then we're probably falling back to 92, 91, and maybe even that zone below at 89, 89.5. Meta. Been a very strong name. Yeah, I would draw a little zone of support. Right about here. That we are starting to slip into. Overall, looking for us to try to hold 182 at the bottom of the 2-hour squeeze. As long as we can hold 182 and get back above 184. Looking to push up to about 186 at the top of the 30-minute squeeze, and if we can head further. Starting to slip a little bit. We're getting closer to that 182. If we can get back above 184 and push through 186 at the top of the squeeze, looking to get back up to 188, 190, where we kind of topped out at the top at the 2-hour squeeze. If we give out 182, we want to target back to 180, where the daily 8 sits. Past that, 175, where the daily 15 sits, and the daily 21 at 173.5. Microsoft. It's all about holding this daily 200 at 252.5. As long as we can hold there, looking for Microsoft to get back up to 255 and push through it. to start to engulf yesterday, back up to 258 at the highs, and Monday's highs of 260. But if we start to lose that 252.5, that daily 200, we probably want to start targeting down to 250, and then 247.5 where the daily 50 sits. Netflix, they're definitely just letting this sit. But it is arriving back at a key zone, right at about, call it 306 to 307.5. We did get down and tap that zone yesterday. We are getting close to opening near it. So looking for that to hold, and that could give us a great bounce right back up. As you can see, we've slowly been working our way back to this key zone that I have marked. Tapped it yesterday and held and got a great pop, and now we're back to tap it again this morning. As long as it can hold, this could start a nice reversal back up. Looking to come from these squeeze bottoms, which are all stacked at this zone. Again, 306 to 307.5. As long as we can hold, looking to get back above 312, where the 1 hour squeeze sits, and then we can push up to 318, where the daily 8 sits, with the 4 hour squeeze top. We start to lose that 306. We definitely want to target down to that 300, 298, where the third Keltner of the downside sits. NVIDIA. Also holding up well. Near the lows yesterday, it got near the daily 8 at about 232. So looking to hold that 232 in yesterday's lows on NVIDIA to try to head back up. If we can get above 235, looking to get up to like 237.5, 240, and beyond. But if we start to lose that 232 and that daily 8, I'm going to target down to 230, then 227 where the daily 15 sits, 225, and then 222.5 where the daily 21 sits. QQQ. All about trying to hold 295 at the bottom of this hourly squeeze. As long as we can hold 295, looking to push back above basically where we are right now, 296.5-ish, where the daily 21, daily 8 sit, trying to, and then continue up to 298, where the daily 15 sits, and at the 1 hour squeeze top. And if we can get above that 298 and fire that 1 hour squeeze to the upside, target up to 300, 301, 302. SPY. Basically, all about holding 397. Our overnight lows did not quite get down there, but that's where the bottom of the hourly squeeze sits on SPY, down at 397. So if we do have a little selling this morning, want to see that 397 hold. Want to see us get back above a 399 at the top of the 30-minute squeeze, up to 400 at the top of the hourly squeeze. And if we can get above 40.50, we can make a nice push back up to that 402.75, well, 402 where the daily 21, daily 15 sit, and then key level 402.75. If we start to lose that 397, target down 395.5, 395. And if 395 were to give out, then you want to target down to 393.5, 393 where the daily 200 sits, 392.5. Basically a little zone down there near last week's lows. Tesla. Made it below that 190 yesterday and already setting new lows under last week's low. We are at the bottom of a daily squeeze here. I have a key level 179.8, just below 180. So if we do see some more selling and take out pre-market lows at 184.5, target down to that 180, 179.8. In the bottom of this daily squeeze, big key level, I'm expecting a bounce and to come back up. Should we lose that 179.8 0.8, target down to 175, 172, where the second Keltner, the downside, sits. And then my next zone is like 167.5, 166, if we were to see a bunch more selling on Tesla. But made it to the bottom of a daily squeeze. Let's see if it can hold. If it can get back above 190, looking to go to 193 where the daily 21 sits, 196 where the daily 8 sits, and then that psych level of 200 near the daily 15. Now VIX. And all that selling yesterday, VIX just got up to the daily moving averages and didn't even get up to test 20. Got close to it pre-market and pulling back a little bit now. So for upside today, would love to see VIX stay under 20. I'd let it go as far as 20.3, where the daily 15 sits. The daily 50 also sits at 20.2. So for upside today, I want to see us stay underneath those numbers, reject these daily moving averages, and to fall back into yesterday's range on VIX, falling down to 19.5, down to 19, maybe even 18.5 for upside. But if we're going to see more selling, we'll likely see VIX get over 20, over 20.3, and try to make a push up to 21, 21.5. So that's it for prep today. Hopefully everybody found this helpful. Thank you all for tuning in. Appreciate you very much. Good luck today. We should keep our expectations in check. Could we see more selling? Yes. Could we see a reversal and engulf back up? Yes. Could we also just go sideways until Powell's done talking and all that mess, and then they start to break things out? Yes. So keep an eye on your 1 hour and 30-minute squeezes. And, be patient the first 30 minutes because we do have Powell coming up. But we did get through our economic releases this morning, and we aren't tanking further, holding this zone. So let's see if this zone can continue to hold on ES. Again, 39.75, 39.80. As long as those hold, I'll be taking longs up. Those start to give out, I'll be shorting down. So good luck today, folks, and we'll see everybody in the chat.